lots to unwrap here today. We certainly have to talk about Russia and Ukraine. We saw that Russia seized control of the largest nuclear power plant, and everyone's thoughts went to Chernobyl right away. But obviously that's a problem. We'll have to see how Russia advances onto Kiev and what happens from there. But there's certainly a lot of pain that is going to be in the future for folks in Ukraine, and therefore in the rest of the economic world, because pressure that's going to be put on Moscow is certainly going to have lasting effects in the supply chains amongst everything else, Derek.
Yeah, I think that's the big point. And we've been concerned about supply chain outages for some time in terms of triggering inflation that many thought would be transitory. And we know that Russia is a key cog in the supply chain for things like oil, nickel, palladium, and neon, which is used in semiconductors.
And so you think we had a semiconductor issue before. It could get worse. And as you said, so much of the EV world certainly relies on a lot of those commodities. And just as wheat alone in Europe, they're a huge producer over there. So inflation is likely to get worse. We saw a jobs report Friday morning that was better than expected, 3.8% unemployment rate here in the United States. So you look around and say, what's investable? And you have to think, despite what's happening around the world, there are still opportunities here in the United States.
Yeah, and I think the key thing is pricing power. We saw Kroger report a surprise. Well, they were able to pass along higher prices to their consumers. Companies in the semiconductor space, they have pricing power. Walt Disney has pricing power. Energy as well. Right. So, there are pockets. So it's still a kind of a healthy rotational market in a sense. I mean, it's hard to say something's healthy when it's down 15% from its highs. But the mere fact that other sectors are actually going up when some of the more over-owned sectors are going down doesn't necessarily mean we're in a bear market.
And so if you're listening, you go, boy, what do I do with my portfolio? If you're running it on your own, there's certainly a lot of moving parts that you have to look at. And of course, nobody knows really how this is going to play out over in Russia. And hopefully it doesn't get worse. But that certainly was some of the things we heard last week. If that happens, there's going to be more disruption and more volatility. And I think you go back to what Derek just pointed out, what companies can succeed, what sectors can succeed in this environment. And then we have to turn our eyes to inflation, because the Federal Reserve most likely is going to raise rates here in the middle of March.
Right. But I want to make the point very clearly. Right now, our base case is we are not going to enter a recession. Of course, that could change if the price of oil to go to $200 and disturb people's consumption patterns and the rest. But as we see it right now, the fundamentals for corporate America remain sound. Interest rates still remain very low. There's a lot of liquidity on the sidelines, and it's just sentiment that has gotten extremely negative. The fear and greed index that I like to talk about a lot is at 17. That's a very low level, the lowest level we've had since March of 2020.
Is that shocking? You said there's not a chance of recession, but I will tell you, I went to breakfast this morning with my son, and he ordered a pancake. You know what else was flat as a pancake? The GDP report. Atlanta Fed had us at a flat zero, my friend.
Well, I said our base case. I didn't say there was no chance.
Right.
We think there's a much higher likelihood we don't have a recession than we do, and that can always change subject to the facts. And when the facts change, we'll change our minds.
And so you look at the term that we haven't really used in decades, and that is called stagflation. Most of you might remember that term, stagnant economy, while having inflation, and that certainly looks like that's in our future.
Yeah, that's back when we were wearing a leisure suit.
Exactly, like the one you have on now with those pleated pants, fella. But stagflation is something where you have a stagnant economy and inflation. Inflation certainly is hideous, high sevens, maybe even in the eights. And where it goes from here is really the question, Danny, and that is the reason why all of this discontent that people have, they really should go through this process that we talk about on a weekly basis.